Okay, Chapter 1, the Manager and Management Accounting. Now, so far, we've got 2/3 of the chapter done, and we talked about the differences between financial and managerial accounting, differences in focus, and users and timing, how management accounting supports company strategy, business functions in the value chain and the supply chain. All right, and you want to have a clear idea of this and how the supply chain is really part of the production spot here in the value chain, and then finally the decision making process. Managers use cost accounting information sorry, to make decisions about research and development, budgeting, production planning, pricing, and the products or services that they offer to others. So now we're just going to look at the remaining objectives in the chapter. The guidelines again, we talked about this the last time, but a little bit more on how management accountants support managers. We're going to understand how the management accounting fits into the organizational structure. And finally, what ethics are what part ethics play in a management accountant's job. Okay, we talked about the guidelines before, and this is how management accountants, how they focus to be able to provide the most benefit to managers. And the most important one here probably is that we look at alternative ways to compare costs in different decision making situations, and also to remember that there are different costs for different purposes. I once had somebody ask me what the cost was for a service that the bank provided, and my answer was, what do you want it for? Okay, because the costs can differ. So, and managers don't really understand those distinctions. It's really up to the management accountant to be clued in on what they're going to, what kind of information they're going to provide. The next piece is on line and staff relationships, and you might remember this from 2071 also, that examples might include, let's say for line management, would be production, marketing, and distribution. Okay, just think of the value chain, and those are the activities that are directly connected to the product. Where staff management provides advice, support, and assistance, so that would include management accountants, information technology, human resources management. Okay? And this is an organizational structure, and this has a CFO, Chief Financial Officer, who reports to the CEO. Okay, the CFO is also sometimes also might be a finance director, and it's the executive who is responsible in overseeing all financial operations. Okay, so you might aspire someday to be a CFO. All right, that this is the kind of job, if you're good at management, good with managing people, that might be the type of thing that you're interested in. But the functions underneath here, say underneath the controller, then would be the next one down. Treasury, what taxes, for sure, just taxes, tax. Treasury deals with cash management. Risk management's a separate area. Investor relations, that's all external financial reporting. Strategic planning, these are forward-thinking people that are really in touch with what the mission and strategic priorities of the company are. And then we've got an internal auditor over here, okay, who's got a, dotted line to the board of directors. At least some kind of an information channel. But under the controller, we've got all of the things that you are probably most familiar with as an accountant. Okay, global financial so planning and budgeting, operations administration, profitability reporting, inventory, royalties, the general ledgers under here. We had one person, I worked at a bank for 5 years, a big bank on the East Coast, and actually it was HSBC, Hong Kong Shanghai Banking Corp. They acquired us in the end. But we had one person who just dealt with the general ledger to keep those accounts straight. Isn't that amazing? One person, that's all they did. Accounts payable and receivables, subsidiary and liaison accounting. Okay, these are all the functions that come underneath the controller. Now, to people outside the profession, it might look like accountants are just numbers people. Okay, and it's true that accountants are adept, hopefully, at financial management, but their skills don't slide there. Okay, don't stop there. You've got to work really well in a cross-functional team. My last job at the bank was I was the liaison to information technology, okay, which was one of 5 sectors in the bank. It's enormous, absolutely huge. So I was their controller for that piece of the company, but my real line, my solid line, is I reported to finance. Promote fact-based analysis, make tough-minded critical judgments without being adversarial. Okay, nothing's really personal, but as soon as you've got 3 people, it's political, so it makes it hard. Lead and motivate people to change and be innovative. Communicate clearly, openly, and candidly, and by all means, always have high integrity. Once this is gone, it's gone for all jobs. All right, it follows you in your career forever. So ethics and integrity is critical. It's the most important thing you can do for yourself. Now, professional ethics, be sure to take a look in your notes for this chapter on ethics. There's a lot of good information there. The Institute of Management Accountants has 4 standards of ethical conduct: competence, confidentiality, integrity, and credibility. All right. These are the foundations. Ethics are the foundation of a well-functioning economy. And accountants have special ethical obligations, giving they're responsible for the integrity of the financial information provided both to internal and external parties. So that's a lot of responsibility. Okay, but make sure you look at your notes there. And finally, Sarbanes-Oxley. I'm sure you're familiar with this. As part of SOX, CEOs and CFOs must certify that the financial statements of their firms fairly represent the results of operations, and this is due to multiple frauds. And I haven't seen research on it, but I think that the rate of frauds is possibly declined since Sarbanes-Oxley has been implemented. And a lot of this has to do with just the changes in technology in information systems. Okay, because the technology changed really fast, but it takes time before we figure out how to deal with it and how to control it. Okay, so the Act focuses on improving internal controls, corporate governance, monitoring of managers, and disclosure practices of public companies. Okay, so do some problems here. Make sure you're clear about the value chain. That's probably the most important thing here to really understand about what's included in what. And in the next chapter, we'll get back to some numbers.